Helen, overall, what are you making of this? What's your take?
I think the whole set of numbers generally look better than we and also market expected. And I would say that some of them probably show that the overall growth perspectives are still relatively okay. It's pretty resilient in terms of, for example, IP and also retail sales. I think at the time when many people were saying China consumption is probably, still very sluggish. And
that's the thing, isn't it? The retail sales side of things, certainly it's shown softness, hasn't it? It's not come back as vigorously as one would have assumed, but these figures perhaps are lending some support to the theory that Chinese consumers back.
Well, that's partly the story, given that the retail sales is primarily retail sales of consumer goods and also dining out. It doesn't really cover too much of what we care about. For example, consumer services. For example, other than catering, how about accommodation, transportation, overall, healthcare, and all these kind of services are not included in that indicator. So we think that they are getting better, but we thought retail sales could have been a little bit weaker because previous month in April and also in May, cell phones, cars, and also aircons were doing very poorly. So this is a great surprise to see that at least for June, where the online promotion, June 18th, was in place, and people are still spending.
Where are you seeing signs of weakness in the economy that perhaps we're not seeing in this data right now?
I think investment is still a weak point. While the investment number year to date, fixed asset investment, still beat expectation, let's keep in mind that at a time when PPI inflation is at 9% in May and 8.8% in June, if you deflate that FAI series, there's not too much real investment ongoing at the moment. Not to mention that if you look at the breakdown, infrastructure and property investment continue to slow down.
And Helen, David here, when you talk about investment, is that more private investment or government investment? And how do they engender, of course, a pickup in that? Because we had a triple-R cut, but I'm not sure that helps a lot.
Yes, I think investment are broken down into three buckets usually. Infrastructure, which is more government driven, and then also properties, more private sector. So these two combined are still very much being constrained at the moment. And we think that probably just with the triple R cut, that is not going to bring back all the growth, investment growth momentum right away. Instead, we are looking for an acceleration in the pace of local government bond issuance and also some relaxation in the credit control, especially in terms of discrimination against the local governments and developers.
Okay, so a lot more issuance coming through in terms of, local government financing here. What types of investments do they need to put in? Not the sort of investments that simply go to waste. I mean, where does the economy need the money right now?
Well, we think that there is still a lot of room for further infrastructure investment. That includes the old type of investment, which is, as you described, we call it 铁公鸡, railway, highway, and also the airports. On top of that, we also have many kinds of new infrastructure. For example, 5G towers. For example, the intelligent, urban development, and many other type of, and not to mention environmental related kind of investment at a time when China is still bound to, commit to its, 2030 carbon, peak, ultimately long-term goal.
Helen, I mean, how important will these numbers be for the direction of the yuan? That's one part of my question. Or do we have to wait for a response, perhaps in a monetary sense, and get the minutes from that meeting of the Politburo 2 weeks ago, in 2 weeks' time?
Yes and yes. I think, first of all, it is important in terms of suggesting that overall growth momentum in China is still okay. If you look at trade numbers yesterday were still pretty fine. And at the same time, you also look at the numbers in terms of, the IP and FAI. Probably monetary policies are not about to ease very quickly for very long, which means probably yuan shouldn't be, too weak for very long.
I think the traders are a bit confused right now about this data because the headline number wasn't as scary as thought. The retail sales were actually a beat,
yep.
And yet we saw the triple R cut last week and also an MLF, a little bit of tweaking there. Is there really a need for more easing?
Well, we're not sure yet because, number one, I think the triple R cut was a surprise, and it is important to point out that it is possible policymakers saw something that we didn't see, and they're just moving on the curve or even ahead of the curve. And I believe if you look at the strong money and credit data in June, that also suggests that they were probably already putting something in action. They are encouraging more credit expansion as we speak. If that is the case, probably they don't have to keep easing in place for much longer.